China has decided to hit back at the United States and has stepped up its retaliatory measures against Donald Trump. While Brazil is still in a festive mood, the global scene is on fire. The Chinese government has announced import tariffs worth $21 billion on agricultural and food products from the United States. In addition, it suspended the soybean import licenses of three major U.S. companies and cut off the purchase of lumber from the country. All this was in direct response to the tariffs imposed by Trump on Chinese products. Among the products affected are soybeans, wheat, meat, and cotton. What do you know? The United States becoming an agro-export powerhouse. Ring a bell. But this deindustrialization could come at a very high price. The companies affected by the suspension include the CHS Incorporated Agricultural Producers Cooperative, global grain exporter Louis Dreyfus Company, and terminal operator Export Grain Terminal. The Chinese government claimed sanitary problems such as pest infestation, but we know that this is more like economic retaliation, and it doesn't stop there. Canada also got into the game, imposing tariffs of 25% on imports from the United States, amounting to a total of 30 billion Canadian dollars. Prime Minister Justin Trudeau has already warned that his country will challenge these measures at the World Trade Organization and in the trade agreement between the United States, Mexico, and Canada. And now, did Trump think he could tax everyone without suffering any consequences? The financial market has already felt the blow, with stock markets plummeting and worried investors. Warren Buffett has warned that tariffs can be a real act of economic warfare, and that in the end, it's always the consumer who pays the bill. The United States grew up betting on the free market, importing raw materials to produce and export high-value added products. Now, by trying to reverse this logic, Trump could be putting the country's economy in trouble. Inflation could soar and his popularity will take a hit. Unlike the United States, China has no election to worry about. So what can Trump do now? Double down and raise tariffs even more? China has already made it clear that it won't back down. The problem is that the United States isn't just fighting China. It's also facing Mexico, Canada, and other trading partners. The result could be a major change in global trade, with countries seeking new allies and reducing their dependence on the United States. The world markets are paying attention. China is already moving to strengthen trade partnerships with other countries, including Canada and Mexico. This could accelerate the shift in the global economic epicenter. After all, if the United States closes in, other countries will take up the slack. So, what do you think? Is Trump executing a brilliant plan or just shooting himself in the foot? Comment here.